Hey investors, Muzzy here. I just want to discuss with you guys what you should be doing with your portfolio during these crazy economic times. US and China tensions have been at all-time highs. There's rioting, and Mexican beer is just shutting everything down. But let me talk with you about something super recent. Now, I've always been a fan of expanding your portfolio into the foreign market, but recent news has made me question owning shares in any Chinese companies, aside from shares owned in my mutual funds. In fact, I just sold out of my single Alibaba shares at a pretty handsome profit. Now, we know that Trump has never really been a fan of China.
China. I love them.
Say China, 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 China.
In fact, since his time in office, there have been two separate trade wars, both of them significantly affecting the US and Chinese markets in a negative way. Most recently, however, the US government is accusing the Chinese government of using their consulate in Houston as an economic espionage center, and Trump's given orders that it be shut down in 72 hours. Supposedly, they were harboring a fugitive inside of it and are burning evidence of their crimes. This is huge, and already Chinese stocks are slipping as US and Chinese tensions increase to levels that we just haven't seen yet. China makes up about 20% of our country's imports and exports, and many major US companies operate out of China. If there is another trade war, I could see this dipping the market substantially. And I'm not saying this is necessarily a bad thing. This may be a golden opportunity to get into the market at a point where prices are better than they've been in months, especially if you're extremely heavy on cash. And I definitely advise being heavy on cash right now. If you look at the Shanghai Index, which tracks many major Chinese stocks, you see that it's hitting 52-week highs quite frequently, a lot like the US market. And not just the index, several big Chinese stocks have recently come down from 52-week highs, including Alibaba, Tencent, and JD.com. Now I'm going to give you two pieces of practical advice, one from Warren Buffett and the other from his mentor, Benjamin Graham. The first is to be greedy when others are fearful and to be fearful when others are greedy. And let me tell you, it's not just Chinese stocks that are at all-time highs during this global health pandemic. American companies are going just as insane. And you can call it what you want and say that investors are just looking past the short-term negativity of the Mexican alcohol, but I'd call it greed. Company earnings and the employment rates are way down, but we see that stocks are at all-time highs. Not to mention, election years are always crazy years in the market, and we see that stocks are at all-time highs. I'd call this greed, and so I think that we as investors should be somewhat fearful. The second piece of advice is that when a stock reaches a 52-week high, you can almost always get it at a 30% lower value somewhere in the future. I really don't understand when people see that the stock market is at all-time highs and they think it's a great time to jump in. That's the tip of the iceberg. That's when you're going to lose big if it crashes. And don't get me wrong, guys, I'm a bull, and I definitely believe in the market for the long term. So here's what I advise doing. Always hold at least 10 to 30% cash. I myself am 30% plus cash heavy at the moment because if the market dips heavily, I'm going to offset my losses and get some great companies at great prices. Secondly, hold some healthy long-term paying dividend stocks and reinvest the dividends. There's nothing I love more than reinvesting my dividend payments into a beaten down market. It's a great form of dollar cost averaging as well. And many of you guys hate to hear it, but if you're up an unreal amount on a stock that you just bought when the market was down and you really don't know much about the company other than that it's given you an awesome return, consider taking some profits. No one ever went broke taking a profit. And lastly, but most importantly, don't get involved in your emotions and do your research. Look at this graph of the big dips in the S&P 500. Every one of those tiny dips we see now, people were freaking out about. And I know many of us wish we could go back in time and invest then. The stock market is a roller coaster that always trends up. And so if we get to a period of being down, that's the time to do your research and buy some awesome companies at awesome prices. Thanks for checking in today, guys. And if you enjoyed the video, please like and subscribe. It helps the channel out immensely.